Welcome to Dig Deep, the mining podcast. In this podcast, we go deep into mining news, hot topics, and live interviews with mining professionals and leading figures in the mining industry. Introducing your host, Rob Tyson, founder and director of Mining International and Mining International Executive, a leading global mining recruitment and headhunting agency.
Hi, mining community. Welcome back to another episode of the Dig Deep, the Mining podcast, the show that brings you the latest insights, thought leadership, and stories from across the global mining industry. In today's episode, I'm joined by Martin Horgan, who's a well-known figure in the mining industry with a proven track record in exploration, development, and operations, from leading Toro Gold through to his time as CEO at Centamin. Martin's going to share his thoughts on what drives him to potentially set up a new mining company, what kind of opportunities he's targeting next, and I suppose how his past experience have shaped his current approach to risk and value creation. We're also going to discuss whether gold remains his focus, or maybe any other minerals or metals that are on his radar, how market factors like whole gold prices influence decision making, and obviously how investors' perspectives align with management views of risk. Martin's also going to reflect on his lessons learned from his time at Toro and Centamin. He's also going to be attending the upcoming Resourcing Tomorrow event, the premier gathering of the world's mining leaders, taking place in London from the 2nd to the 4th of December. What sets this event apart from its unmatched audience is the C-level executives from some of the biggest mining companies worldwide. There's going to be over 40 government ministers, leading mining technology providers, and many more mining professionals in our industry in attendance. Dig Deep, the Mining Podcast, is a proud partner with Resourcing Tomorrow. And with this, there's discounts if you register through us, and all the details in how to obtain a ticket are in the show notes accompanying this podcast. So please take advantage of this great opportunity and hopefully see you there. Martin, welcome back to the podcast. How are you doing?
I'm all right, Rob. Good to see you again, mate. It's probably sometime in the last year, I think we last spoke as well. So yeah, I'm all right, mate. Not bad at all.
Yeah, I think it was beginning part of the year that we had our last episode, and obviously a lot has changed since then. So for those that didn't listen to that previous episode, and for those that don't know you, although I imagine a lot of people do know you, I just wanted you to tell us a little bit about yourself, a little bit about your career, from early days to present.
Sure, no problem at all, Rob. And glad to say, since we last spoke, that Man United have put a few wins together at last as well after a fairly dismal year. So slightly on the bounce up, but we'll leave that there for now. So I'm a UK mining engineer, studied at Leeds back in the early to mid 90s. Joined Goldfields of South Africa, working at East Driefontein out of university, on the milk round. Did a couple of years there. Worked up at Tsumeb in Namibia as well, when that was still going as part of that Goldfield stint. From Goldfields, I then joined Stephen Robertson and Kirsten, SRK, working in Cardiff and Johannesburg, usual sort of study evaluation work, and then the usual sort of audit, due diligence type work for both lenders and equity, capital markets type business opportunities as well. So 4 years there, working in the resource department with Mike Armitage, actually, despite being a mining engineer, which was, I think, really instructive to give you a broader appreciation of the sort of geological aspects of life. From there, joined Barclays Capital in 2000. Obviously in the mining team, spent 6 years investment banking, primarily focused on the sort of project side of life, not really doing much of the large-scale corporate sort of lending that Barclays did at that point, more focused around project advisory, project lending, structured products as well. Global basis, a really interesting mandate, made some fantastic contacts, saw a huge amount of deal flow, as you'd expect, to augment the sort of number of projects I'd seen at Cardiff at SRK as well. So did that for 6 years, then came back into industry, joined the board of an AIM-listed junior as an MD called BDI Mining, which had a diamond project in Indonesia, in Kalimantan, with a Kimberley certificate. Joined that, put a bit of discipline into the company in terms of its direction and strategic direction. Sort of tidied up the assets, worked with the team to do that, and then we were acquired by Gem Diamonds in 2007-8. GFC hit in 2008. And obviously, I think that was quite a tough time for the sector, as it was for all sectors, I suppose. And then a colleague and I from SRK, a chap called Howard Bills, Exploration Geo, we've remained in touch. We've been friends since the late 90s. And actually, we saw sort of 2009 either as the worst time to be in the sector, or actually probably one of the most interesting times to be in the sector, because for the first time in quite some time, because of a lack of investment and capital available to the sector, is that with a little bit of money, you could actually start to build out a portfolio. So in 2009, almost on a counter-cyclical basis, we established a company called Toro Gold. And the model there was to effectively find exploration projects, sweat them through the normal exploration evaluation cycle. If we found something that looked interesting, push it through to feasibility and beyond, and actually have the potential to take it into production if the asset warranted it. So we set off with a little bit of seed money and built up a portfolio of about 11 assets across West Africa and actually in Sudan in 2009-10. And out of that process, we picked up a joint venture in Senegal where we made a discovery at the Mako project in eastern Senegal. Took that through from first principles, sort of rock grab sampling and soil sampling, all the way through to feasibility study. Fairly quick time frame, about sort of 5-6 years to get from discovery point to feasibility, and then took that into production. Through a construction phase and into operations, where we operated very nicely for about 18 months before we were acquired by Resolute Mining back in 2019. So sold BDI into Toro, built up Toro, and then bought out by Resolute. It was a bit of a loose end of 19, early 2020, and then was approached to join Centamin, the London-listed producer with the Sukari asset in Egypt, to take on the role of CEO there. And I guess the opportunity there was to look to effectively optimize and reset the Sukari asset, the large-scale gold mine in Egypt, look to see what we could do with the West African portfolio, and really look to take the company forward and see if we could use the Sukari asset as an engine room to grow a multi-asset business. So I joined that in April 2020, just as COVID was breaking. A wonderful bit of timing in terms of that, but a bit of a challenging first few months just getting to grips with a new operation, a new team, while there was all the travel restrictions on around COVID as well. But we navigated that. A number of the team from Toro came across with me, and really we basically set about looking to see what we could do with the Sukari mine. So we were able to effectively look to sort of re-optimize various parts of that business and look to effectively re-establish it as a long-term sort of, a tier one type asset. A focus on geology. We had a significant amount of resource and reserves. We stabilized production back towards the 500,000 ounce per annum. Installed a large solar farm, 36 megawatt solar farm. And in a generally inflationary environment, I managed to sort of trim the AISC by about $200 to $300 per ounce as well, despite those sort of headwinds of inflation. So really, great work by the team to put Sukari sort of, into its next phase of life. These long-term assets go through these various sort of cycles of life, and really sort of be part of that, setting out the map for the next 10 or 15 years at that asset. In parallel, we started to explore in the Egyptian desert around Sukari. That was in part negotiating with government to put together a new sort of regulatory and fiscal regime, and then with that sort of in place, able to secure some ground and start some effectively greenfields and I suppose brownfields exploration in Egypt. And then the final piece of the jigsaw was that there was the assets in West Africa in Côte d'Ivoire. That was an acquisition made by Centamin in 2014, and that was taking on a 5 million ounce resource and taking that from the resource through to feasibility study in 3 years. And of course, with the experience of Toro in Senegal, Francophone West Africa, Burundian gold, meant that we were sort of, pretty comfortable in that space as well, and took that project to feasibility study. So we'd kind of, taken this asset, re-optimized it, got some growth in Egypt, got a development asset ready to go. We're just then looking to sort of build out the business. And unsurprisingly, these tier one assets are high quality and they're rare by their nature. We were approached by Anglo Gold Ashanti in early 2024 and ended up engaging with those guys through a very constructive process, leading to an acquisition in November 24 by AGA of Centamin. So yet again, found myself out on the street about a year ago now. But I think that was a great deal. I think Centamin shareholders, we got a 40% premium on the price at that point. Had they held their Anglo stock, they'd have done very nicely today, a year on, with the gold price and Anglo's performance. So I think good for Centamin shareholders. I think Anglo have got a great asset. They're operating very well. And I think the government of Egypt was very happy to see, it's a North American sort of tier one multi-asset business coming into Egypt and kind of really endorsing it as an investment jurisdiction as well. So I think actually, in retrospect, one of those rare things where, everyone left the sort of the negotiation and can say that it was, a pretty good deal, but for all parties as well. So basically found myself back on the street again late last year. And then over the course of the last sort of 3 or 4 months, the team that was, substantially Toro and Centamin, having a few conversations about, do we want to go again? So really that kind of takes us up to today, really, Rob.
Yeah. So you've had a year off, enjoying life. It's up to you if you want to tell us what you've been doing. But now, obviously, you're looking to go again, start up a company. Why are you looking to get back into the industry, and obviously why looking to start up a company again?
Yeah. Yeah. Mainly annoying my wife and children is probably what I've been doing mostly over the last year, to be honest with you, Rob. I think part of the reason going back into it is they want me out of the house and back going again. Look, to be honest with you, I really enjoy it. I really enjoy the sector. I've been very lucky to work with, a really good team of people, from Toro and into Centamin days. And I think it's, I think when you get that sort of chemistry that we had or have continued to have within the team, there's something that I really sort of enjoy in that basis. I think, in terms of the sort of thinking about the next steps, where do we go from here? We sort of got together as a team in the, late spring, early summer. I said, do we want to go again? And I think collectively everybody felt that, within that sort of small, relatively small management team, that we certainly feel we've got one more in us. Effectively, so I thought, let's get ourselves back on the pitch, as it were, and really let's see what the opportunity is out there. So I think, it's coincidental with, a very interesting time geopolitically right now in terms of mineral supply and sort of the geopolitics of what's happening in the sector. A realization fairly late in the piece between sort of, North America and Western Europe that we've outsourced a lot of the supply chain. To east of the global outlook, and having to think about that. That's coupled with, I guess, this sort of concept of the de-dollarization trade, and been really supportive of gold. So we're seeing sort of the precious space moving up as well, and generally seeing a lack of projects and sort of pipeline there effectively to come through. So I think that, when you sort of step back and look at this, is that, the team's ready to sort of get it going again. I think it's a really interesting time within the sector where increasingly people are focusing back on it. Maybe it's been a little bit sort of unsexy for a little while, but I think people now try to understand, where that battery comes from for the phone or the car, where the sort of, the various basic building blocks of society actually are sourced from, and how we get them and how we make sure that we can continue to get them. I think people are waking up to that as well. And I think on that sort of financial side, as I mentioned, on the de-dollarization as well, people now looking at sort of alternative asset classes, away from the US dollar, and gold clearly been a beneficiary of that as well. So I think it's an interesting time structurally within the sector. I think there's a dearth of available product in terms of projects coming through towards construction phase as well. And I think there's opportunity there to basically leverage our skill set and experience into that pipeline within a fairly constructive sort of global environment as well. And we kind of enjoy it, Rob, as well, to be honest with you. It's kind of good fun.
You've obviously been involved in various parts of the mining life cycle, exploration, construction, operations. I suppose, what type of opportunity are you looking for, may prefer? Are you looking at just gold projects? Would you look at other minerals? And I suppose also jurisdictions. Is there any particular jurisdictions that you would prefer? And maybe some jurisdictions that you're not going to go near?
Yeah. Yeah. Well, it's a really good question, actually, Rob. And that's part of the sort of conversation we had as a team, sort of, as I say, back at the end of the spring, early summer, is that, what do we want to do? We've got a blank sheet of paper. We can almost within reason go anywhere and look at anything, really, both in terms of commodity within sort of precious and base metal space, shall we say, and then on a sort of global mandate, where do we want to be effectively? So we sort of sat down and had that conversation, and relatively quickly with some simple discussion, you can narrow that down. So, I think, if we really think it jurisdictionally, historically, we've all kind of worked predominantly in Africa and that time zone. We're all predominantly sort of, UK based, if you like, in that time zone. So that kind of naturally leads us to a kind of north-south corridor from London. So that gives you Africa, the Middle East, and it gives us Europe as a kind of paper round. And that's a big geography. Obviously, there's plenty of space within that sort of north-south corridor to think about. Then you think about sort of jurisdictional risk. Um, these when you're setting up a company from first principles, this is potentially a multi-decade sort of decision. If things are successful and move forward, if you have some success and find something, an exploration cycle of 7 to 9 years, a construction cycle, at least a 10-year life. You're talking a couple of decades potentially there. If you are able to be successful, so you start thinking about trying as best as you can to think about where you can find that stability and confidence that you can start to invest dollars and be comfortable and confident in the jurisdictional sort of regulatory framework, in the fiscal framework, West Africa from a security perspective as well, what's happening. So I think very quickly you're able to then, with the old traffic light system, start putting a few red lights on a few places. Mali and Burkina, for example, not rushing there right now, to be honest with you. So you can start to think about places where you'd like to be. Obviously, it's got to be led by the geology. Where can you find things? Where can you operate with potential as well? And then you think about our experience. So clearly, we've worked in the Caribbean of West Africa, in Senegal, obviously with construction, but also operationally in Côte d'Ivoire, Senegal, and Guinea. They're places that have got, still really interesting mineral endowment and still have, are investable, I think, from a country risk and a perspective. And we know what we're doing there. And I think more recently, of course, with our experience in Egypt, the ANS, the Arabian Nubian Shield, obviously it's a really interesting area right now. Lots of people looking at it, whether that's obviously on the Egyptian side, less so, unfortunately, on the Sudanese side, but then, of course, Saudi, the kingdom across there as well. And obviously lots happening there as well. And I think, the team that we have, because we've worked at Sukari, as others have as well, of course, but because we've worked at Sukari, because we've done that greenfields exploration on a brownfield sort of hub and spoke model outside of Sukari, is that, we've got some genuine sort of practical, pragmatic, recent experience in the Arabian Nubian Shield as well. So recognizing that when you think about jurisdictional risk, Saudi, when you think about regulatory and fiscal risk, political stability, security stability, scores pretty highly, of course, as you think about all those sort of things. Geologically, very interesting as a jurisdiction, the ANS, and of course with our track record and our experience there as well. So they're naturally some places that West Africa would be somewhere that we continue to look for projects. I think places like the Kingdom would be of interest to us as well, and then of course more broadly Europe. I think the risk in Europe, interestingly, is less about sort of regulatory and fiscal or stability. It's the fact that if one was to be successful, through an exploration or development phase, is the regulatory environment there is likely to be a longer lead time in terms of, environmental permitting and so on and so forth. So you might feel more comfortable and confident of working there, but I think the lead times to development and operation are probably elongated because of that sort of fiscal regime as well. So I think, that's what we've thought about in terms of jurisdictions. That's what we think about where we can apply our skill set around sort of those things. And then we think about what are the opportunity. And I think, as you say, we've been very lucky to have everything from exploration to evaluation to build and to operational experience within the broader team. So we feel, comfortable working somewhere within that sort of, life cycle. I think the reality is that when you start screening for available opportunities, you kind of realize that certainly in the precious and base metal space, in that north-south geography, is that actually, the availability of opportunity is actually quite limited. I think, we can probably, we've rewind 5-10 years, probably a dozen or so projects that are emerging. Fast forward to today, and actually the number of projects that are shovel ready or close to being shovel ready, you could probably count on one hand. And of course, then you sort of getting a higher commodity price environment, and how does, one get involved with a project like that becomes quite difficult. So I think what we've found as we've kind of look across the sector right now, trying to find an opportunity to put our skills to work, trying to find an opportunity where we believe that it makes fiscal sense or an investment sense as well, is that naturally that sort of tended us to look a little bit earlier in the piece as well. So right now, there's probably more opportunity in the sort of exploration resource phase than there is maybe in the pre-development development phase. The risk, of course, is that your longer lead times, it's more speculative because you're earlier in the project cycle. You've got less surety that a project's going to be a goer. So you're trading off ability to get access to projects around sort of surety that you're actually going to be able to take something forward from there as well. But hopefully that's where we leverage off the experience within the team, that we can try and identify those projects that we believe are have the potential to basically go from exploration and into that evaluation phase and on from there as well. So I think, long story short, if I could sum it up, north south from London, including the Middle East, where we naturally sort of have we believe sort of good experience. Gold and base metals, copper, gold's often associated together. We're not going to take on large infrastructure projects or rare earths or lithium type projects. I think certain geographies we're more comfortable because we're happy to work there, and we think investors would be happy for us to be there as well. And I think that right now there's probably more opportunity in that earlier stage sort of part of the project cycle than maybe a little bit later on as well. But obviously that comes with commensurately higher sort of technical risk as you and longer lead times as you go forward as well.
Yeah. Obviously, you're considering projects. Either projects are coming to you, or going and obviously maybe seeking some projects. What sort of risk factors do you consider when you've been looking at any of these projects? And do you have a sort of top 3 criteria that you, I suppose, gauge one project from another?
Yeah. I mean, it's a really sort of sad old cliche, but we'll really start with the geology. You have to start there and look at the sort of, what is the opportunity? Is the geological sort of potential there? Is it, or the knowledge base there of what we're looking at? Is there that sort of, foundation on which the rest of the thing is built? Because if you don't have the geology, quite frankly, there's nothing else to sort of go after. So really we start with the technical and within the technical sphere, you certainly then start with the geological interest as well. So obviously, I think, very technically led in terms of our evaluation. I would preface that by saying that we'll only be looking for things in jurisdictions that kind of qualify. So there's no point in having a tremendous geological opportunity in somewhere that's a very challenging jurisdiction. And I think we can all think of maybe large copper gold projects in Pakistan that might well be world-class tier 1 deposits, but in a particularly challenging jurisdiction. Now, if you're if you're Barrick with a balance sheet and all that, you can maybe pursue a Rico Dick. But certainly where we are in the world, or where we are as a scale of a business, is that we've got to think about, if this is a real opportunity, can we go and raise funding for that through equity and ultimately maybe the debt market as well. So on the assumption that we're looking in a jurisdiction that we believe is investable, then clearly got to be technically led. So if we technically like the project on that basis, then it comes around to the fiscal terms of how does one structure a transaction to make sure that actually, you're going to put the time and effort into this, and if it is successful, you've got a share of the outcome. And I think something that we've always done, or always tried to do at least, is end up with an equitable outcome. And if yourself and your partner can have a bit of a win-win on it in terms of the structure, then that's the best outcome if you can get to that point. And I think in a high gold price environment, I think it's quite interesting that local partners, certainly we think back to Toro days in 2009, you turned up with a post GFC a little bit of money, and people were like, brilliant, come in, yes, minimum upfront payment, please come and do some work on the ground, get involved. Now, in a sort of $4,000 gold price environment, you turn up with this technical team, with this track record, you can quickly maximize the value of the project if it's real. And expectations, from local partners are sky high. That they've seen the gold price, they see what's happening. There's a very good sort of informed network of sort of business around West Africa, and people are seeing some pretty interesting, or people are telling us that they're seeing some pretty, eye-watering numbers. That, I can get an upfront signature bonus of this number, which is 7 figures in it, 6 zeros at least at the back end of it, and you kind of go, wow, and that's just to get a ticket to pay. That's even before you start spending money to do that work. So I think in that environment, can you structure something that is fiscally sensible? And there's always that great fear and risk that you kind of miss out on something because, fear and greed's a wonderful driver of human emotion. But but it's being disciplined and not to get dragged into this sort of potentially spiraling. Now, if gold goes to 6,000 and you're successful, you look very clever. But, you could go and spend $1 million as a signature bonus with somebody. You do a bit of basic work and find out that geologically it's not interesting, and you've burnt, quite a bit of hard-won or precious equity on that basis as well. And I think maybe just as an aside on that, I think what's really interesting now is that sort of the emergence of companies from the East, from China specifically, are getting involved in the African space. We've seen some very sophisticated groups, working right across Africa. They're aggressive in terms of their desire to sort of acquire mineral rights and projects, more than capable, both technically and financially, to push projects forward, and really aggressively looking to sort of push their sort of portfolio building across Africa. So from our perspective, whereas we're trying to negotiate with the local partner, we might historically have been negotiating against an Aussie junior or a Canadian junior or another British junior. Now you're finding there's also potentially sort of Chinese interest in there, and that can come with some pretty significant sort of financial incentives for that local partner to choose them as well. So it makes it a really sort of competitive landscape right now. And I think the real balance for us is you don't want to miss the boat, you don't want to miss out on an opportunity, but by the same token, you don't want to basically blow all your chips on the first the first table you get to in the casino, right? And go from there as well. And I think that discipline is one of the key things. But it's a really interesting landscape out there right now, and it's challenging, I think, to try and put in place a win-win sort of scenario.
Being obviously an expert in the gold space, and obviously you have covered this, but obviously with the high gold price being where it is now, how does that impact your decision in terms of assessing a particular project? Do you think sometimes it can help with the gold price being that high, or can it be a hinder? And obviously you can't change the gold price. It is what it is. So I just wonder what your thoughts are when you're analysing deals. Whether it does help or hinder being such a high gold price.
No, absolutely, Rob. No, and look, I think it depends on what you're looking at, and to unpack that a little bit, that sounds quite a glib sort of statement, but if one thinks about the sort of the development cycle of exploration, resource identification, evaluation, construction, operations, that the steepest part of that value creation curve is always that first phase where you take a permit with nothing on it, soils, mapping, drill target, you poke some holes in and you hit 20 meters at 3 grams from surface, across, you start to see the bones of an emerging sort of discovery. That clearly is the steepest part of the value creation curve. And obviously it's the cheapest part. So that early stage of doing the initial drilling is the least expensive compared to, say, doing a full feasibility study. Clearly the highest risk as well. That's always the trade-off. But really, if we think about Mako, the gold price, we were running feasibility numbers at 1,100, for Mako back in sort of 2015, 2016. But really, the way I think about it is that exploration phase, how steep that line is, that value creation, that first step, and how high it moves up the value graph. If you think about value against time, the gold price or the copper price, it really determines how high that line goes up the value curve. You'll always get the steepest part of the curve on making a discovery. So in a sense, sort of when we think about if we're doing the technical evaluation in a high price or a low price gold environment, it's like, is there a geological opportunity here that could host a discovery? And you almost do that almost without sort of reference to the commodity price. The commodity price, as I say, links into trying to do a deal, say, on a joint venture basis with a local partner if you've not done direct application. So I think on that basis, I'm almost, agnostic about the commodity price when we're evaluating an exploration opportunity. I'm not when I'm doing the joint venture negotiation if it is a JV, but generally don't really think about it. We then kind of move forward into sort of, say, something that's a scoping, pre-feas, feasibility, or something that's a bit further along, maybe towards development. Then, of course, you kind of, then the price becomes significantly more sort of more pertinent to the sort of the evaluation criteria. And one could imagine, doing a deal for something that's sort of feasibility or something that's operationally, what's your long-term gold price? Or what's your price that you're prepared to, run the models on, and therefore do a financial and ultimately investment decision based on. And again, one could get hold of an asset at $3,500-4,000. And in one scenario, gold runs up to $6,000 and you look like an absolute rock star sort of 12 months later. Aren't you clever for doing this? The flip side is that you get an asset, you get hold of it at $3,500-4,000. You do some great work, you do some optimization. It's operating all in line with your plan, but gold's now at $2,500. And all of a sudden it's looking pretty much not such a smart investment at that level as well. So I think the gold price is significantly more pertinent around that. And again, I go back to that point around, if you're prudently looking at sort of, do we layer in a $2,000, $2,500 long-term gold price? You might find that you then miss the commercial bid because there's other groups out there that might be prepared to take a different view on the long-term gold price. So I think it makes it a lot more competitive to do that. I think it's interesting that if one's looking now across the sector, where are companies reestablishing reserve calculations at? Where so it used to be 12, 13, 1400. You see some groups now reporting reserves at $2,000 an ounce. So that'll tell you, is that a flaw? If you think about where banks are prepared to do project financing or lending into the sector, what are they using as a long-term gold price for assessing, say, a 7-year project finance loan, 2-year construction, 5-year repayment? What's their view as well? And as I understand it, and I'm obviously not that close to it at this stage, but just talking to people in the sector that I know, is that you can kind of see that sort of 2000 to 2002, 2004 number is where maybe sort of reserves are being calculated, where bankers are prepared to put, lending dollars on the table. From an equity valuation basis, it's probably north of that as well. So I think, back to the point around sort of, higher sort of commodity prices. I'm agnostic. I'm more agnostic in an exploration scenario. It's about the geological potential. It becomes a lot more pertinent further down the track. When you're looking at something that is more developed. And look, I would never try and predict the gold price. I mean, it's over the years, people always ask me, what do you think it's going to be? No idea, but what you would say is that the longer it stays at these levels, there's like a structural sort of foundation built into the price as more and more people enter it. And when you look at the fact that banks are prepared to lend at these sort of levels as well, the levels we've talked about, is that, do I think it's going back to 1,500? No, I don't. Do I think it's going to 6,000? I'm skeptical, but who knows what happen? Things might happen in Washington overnight, and things are said, and all of a sudden we're off again, or things might get interesting in China, Taiwan, or the Middle East, and all of a sudden as well, gold's such an irrational sort of metal around political geopolitical impacts that you wouldn't bet against it going to 6,000. But if I was to put my a line in the sand, is that it feels supportive, and if it does retrace from these levels, 2,500, 3,000 probably feels like quite a sort of, reasonable medium term, forecast at this point, possibly up to 6,000, but I doubt down to 2,000 and below at this stage. But I'm sure you'll be able to pull this podcast up in 6 to 12 months, Rob, and point out exactly how wrong I was.
Well, my next question was, what do you think the price will be at the end of the year? But I wasn't going to ask that.
I'll tell you, Rob, people that know me have probably people that know me have heard this story many times. I had an Aussie mate of mine back about 20 years ago, and he always said, when you get in a London cab, the gold analyst is always the one that gets the fold down seat. They can tell you what's happened out the back of the window, what's happened, but they've got no idea what's coming up the road. And that's always been the case for me with gold, trying to predict the gold price around, geopolitical or financial markets impacts. It's like, kind of, how do you predict Russia-Ukraine? How do you predict, these events that have driven sort of, a recent gold price and de-dollarization? So, yeah, look, I think it's a tricky one to try and be sort of smart.
And the thing is, even the experts can't get it right. They keep changing their mind and revaluating and making it go up. And did anyone say it would be 4,000 by now, or even a few months ago? Not too sure, but I imagine someone will correct me if not. But in terms of investors, do you think investors share the same risk factor assessment around investment decisions? Obviously based on what you've been talking about, and obviously, I suppose, focusing on the gold sector.
Yeah, yeah. No, look, I think certainly those resource-focused investors, outside of the generalist, shall we say, look, absolutely. I think, most of these big groups have got some really clever people working in them, clearly, obviously, and a lot of technical sort of, capacity in there as well. So certainly the groups that I've, had the fortune to work with over the years, both privately within Toro and more publicly within Centamin, is that obviously there's a huge amount of sort of, very capable talent within that, and they do really significant deep dives into these projects as well. I think for them the difference, of course, is that they can always trade in and out in a publicly listed sense. Well, I suppose potentially they have the ability to trade in and out. Might be slightly more difficult in a smaller company to try and get liquidity, but generally is that yes, I think sort of the more resource focused investors will have that same sort of view as we do around country risk, stability, fiscal, technical sort of capacity, and so on and so forth as well. I think one of the big things that they look at that we don't look at, because why would we, is around management capacity as well. Is that are they going to back is the management team going to deliver into this project's potential? And I think that's something that obviously we we wouldn't look at that as we're going in, because we are the management team. But I think that sort of that track record, I think, is hugely important. And over the years you've seen very, very capable management teams turn an average ore body into a pound note. And you've seen some really sort of sad examples where really good projects have not been delivered or optimized by management teams making poor decisions. So I think management capacity or capability or track record is probably an additional factor that investors will look at. I think one of the themes that certainly I felt second half or towards the end of Centamin before we handed the keys over, and I don't think it's changed, is around that country risk. I think that's a really important. Again, we talked before about investment horizons as well. Could you predict what is could happen in the next 6 months, let alone the next 6 years or the next sort of 2 decades? So I think country risk is increasingly of interest to investors if it's not already there. I think that ties in to that geopolitical sort of angle now when we think about supply chains sort of being secured into Western Europe and North American manufacturing. I think Orion recently have done a critical minerals fund with the US government. And I think that side of it there as well, I think is really interesting around how that interplays around sort of the ability to sort of, align with sort of, geopolitics effectively. But I think country risk is an increasing factor. Well, it is a key factor, not increasing. It's already there. Is a key factor as well. So to me, I think outside of the technical and so on and so forth, I think the two big things would be management capacity. Do we think this team can deliver, or will they come to the right outcome? And that right outcome might be stop spending money on this. This isn't going to make it right now, and that's equally as an important skill to have as to, can we make this thing optimized and can we make this thing work? So quite often that judgment is actually, this isn't going to work. Let's stop spending time and money. Let's move to do something else. And that's often quite a harder decision to make, but I think that's a key discipline that investors like to see. Yeah, and I think that country risk as well. I think there were the two additional things that they will look at that we will, in addition to the sort of the usual things that we would assess a project around as well.
You worked for Toro, which was a private company, and then obviously Centamin, which was a listed LSE listed organisation. What are your thoughts on the trade-off and how that actually might influence the structure of your next business moving forward?
Oof. What side of bed did I get out this morning, Rob? it's it's you know it's it's a yeah. I could make an argument for both. I would say, look, I think you think about where the capital is for the business, where is the investor base for business, and where you're going to get those funds. If you're not in cash flow, if you're not in production, where can you get those funds for exploration and development from? So you got to think about that. You think about the emergence of private equity over the last 10 or 15 years, and both in the equity and also the credit space as well, going forward. And, we've worked with the likes of RCF, with Taurus, Tembo in London, Sprott back in the day as well, Macquarie. So, this is on the private equity space. And they've really sort of, there's a significant amount of funding and liquidity now available within that sort of private equity space. So in a way, they're sort of, depending on sort of how you're going to fund your opportunity. Is it an acquisition? Is it an earn-in? What stage is it? Early stage, later stage? I think it's very hard to ignore the sort of the private equity model, just because it has that firepower to support the sector going forward. Private equity, though, you've always got to remember as a management team and a board that they want an exit. They're going to get out at some point. That's their model. That's what they've promised their LPs as well. And private equity can take large or outsized positions in a business, which is great when you need the funding. Brilliant. These guys are in for 30%, 40%. Oh, fantastic. You then get down the track and they're going, well, listen, guys, we're going to wind the fund up now. So we need to basically get this 30, 40% out of the business. And then then their problem becomes your problem, because a large part of your register now needs a liquidity event. So I think you've got to sort of think about you'll recognize within the sort of, you've got this project development cycle that's moving along. Let's say it's like Toro, and then you always got the back of your mind, you've got to fund it on the way in, and on private equity, you've got to think about that exit as well. How you're going to provide them with that liquidity as it goes out there. Flipping to the sort of the public markets. And then again, I think London's having a tough time of it. I think in terms of, I think that's no secret there. You look at sort of Australia and the ASX, you think about that superannuation, that sort of, rulings where people have to put a certain amount of their defined pension contributions into the ASX. And it's great. It's working brilliantly. And the ASX a real sort of, sort of powerhouse right now. London, by comparison, is pretty dormant. Canada, sort of, between the two effectively, but certainly you've got to think about, if it was to be in the listed space, would you bring a business to London right now, a new business to London? And it pains me to say that probably wouldn't rush here at this stage. The likes of Stephen Fine, over at Peel Hunt, he's been a long advocate for trying to get structural reform into the UK markets. We think about UK pensions and how much of UK pension money is now invested in UK stocks, and it's a fraction of what it was even 10 years ago. So you've got to think from a listed space, where you're going to get that funding from. It's not as plentiful as it was previously. In a listed space, people can buy and sell your shares notionally, so you don't have such an issue that you have on that basis. Then the final thing maybe to say is that I think, the ideal model would be, if you're in a cash flowing business, I think the listed space is very good. I think if you're in a pre-development basis, exploration as well, I think the private equity model works. So if I could have my cake and eat it, Rob, and why not? You asked what would I like to do, is that, I think if you started off, if you had something that was an exploration heading into development phase, I think that very much suits the private equity model of basically you can fly under the radar, get everything set, get everything ready. And obviously that's a lower amount of capital you need to raise for it. As you move towards maybe a construction, which is a larger capital raise, maybe that's the time to take it public, use the public markets, that bigger raise, and then you've got a route to cash flow and a route to valuation. And I think that model is more suited as well. So I think it depends on where you are within your project. I think there's pros and cons of both models. And if you wanted, sort of an idealistic thing, I think it would be private initially, give those guys a chance of a liquidity, partial or full, for the private equity guys, into a listed market. And when you've got clarity, or you've got a route to cash flow, I think that would be kind of almost an idealized project cycle linking to the financial side of it as well.
What were some of the learning points that you took away working for, obviously, Toro, which was private, and obviously Centamin, which was a public company, whether both good or bad, that you'd be taking into your next venture?
Yeah. Look, I think, I mentioned management capacity before, and I think, it's people that make projects, it's people that make success. And I think that sort of, getting that team right, and getting that element to it, I think is critical to success. And I think, we've been very lucky over the years to work with, a really good technical and operational team at the sort of the management level. And then from a board perspective, work with some really good board members that have that sort of, that oversight and that role, and have that ability to sort of challenge when appropriate, to guide, to basically sort of, support there as well. And I think if you get if you get that right, I think that's still, to me, the biggest overriding sort of determination in success. And as a sort of subset of that argument, I would argue or I would say that in reality, if you had the chance of an A-star sort of, candidate that was absolutely sensational technically, but was a bit of a pork chop personally, or you could take the kind of, the solid B plus, but a really good team player, you'd take the B plus any day of the week. And I think, if you get that sort of culture of excellence, both technically correct, but then you put that in an environment of sort of, trust and support as well, I think that's when you really get the best out of people. That's when then everything sort of, works. And have that kind of flat structure. As long as it's in an environment of respect, then people are able to challenge each other. And I mean that in a constructive way, communicate as well, and have that. And I think, when you've been involved with bigger organizations, this sort of tendency for siloing, oh, that's not my job, someone else has got to look after that. I think you kind of lose that. So I think having that sort of tight structured team with a fairly flat structure, working with an environment of mutual respect, but then everyone understands their job and their role and how it interacts with each other, you get that chemistry right. I think that's the success. And I think back to, I worked with Mike Kenyon and Jonathan Rubenstein when I was a banker. There's two Canadian chaps, serially successful. They were Sutton Resources, which was Bullion Hulu, and Barrick. Bullion Hulu, which became obviously Barrick. They did Cumberland Lake. They did what else did they do? They did Canico, Canadian Nickel Company in Brazil. This was a team that sort of repeatedly had success, and they had that model. I think about Clive Johnson and the B2 team. Again, Beamer into B2, a small flat structure. Dr. Bristow, the successor, I know he seems a bit strange having his recent sort of departure, but you think about what drove him, that Rangol success there. So I think for me, if you can get that element right, if you can get that aspect right, that really is key. And I think for me, back to your very first question of why getting back into it, is that there's that next level of talent, those sort of those men and women in their sort of 30s now, and sort of I'm at the ripe old age of 51 now, but the opportunity I was afforded at that age, we can then within that team provide that environment to bring that next generation through, that next tier. They're going to be the future leaders for the next 10, 15, 20 years. You get that right as well. Get them sort of exposed, get them in the business as well. I think that's critical. So I would say that the sort of the team ethic, getting that right, I think that's probably, to my mind, the biggest single factor in our success is that we've got a good bunch of people. I mean, my present company excluded, clearly, but below, within that team, sort of, I think it's really critical from my perspective. I think it's a bit of luck. You might say you make your own luck by being out there. I think, sort of putting yourself in a position to buy the ticket. You don't win the lottery unless you buy it. So you've got to get yourself out there and take a chance, take an opportunity. Don't be scared to fail. Not everything works out. Exploration, mining, it's a difficult game. It's hard. It's not easy. Technical, geological risk, country risk, remote locations. It's hard. So don't worry to fail. And sort of, not everything's going to come off, and things don't always go right, and that's it. But embrace that. That's going to be part of the natural sort of cycle as well. Not everything's going to land as well, but you've got to put yourself to find. We had 11 projects in Toro before Mako was the one that popped up. So it's not like we set up Toro, found Mako, and that was it. We kissed quite a few frogs on the way through there as well, and of those 11. Who knows where the rest of them are now, but certainly Mako is the one that went forward there. So I think having that confidence in yourself to recognize that it's okay to fail. It's probably a bit easier with a few wins under the belt, but it's probably, you might say, oh, look at NBA, it's fine to say that. But I think having that sort of mentality is important as well. And I think, more than anything, just try and know what you don't know. I think that was one of the big questions, the big comments that we've always brought to, and it's Howard Bills, I mentioned earlier. He's in his second half of his 60s now, and he doesn't mind me saying that. But even to this day, Howard will tell you, he said, nobody knows everything. So know what you don't know, and then go and ask the expert. Go and find someone that does know and ask the question. And having that sort of professional humility, I think, is important as well, to get out there and say, okay, we haven't seen this before. This is a new sort of idea, or this is something we haven't come across. Who does this? Who's the best at this? Who does it? Let's go and find out. Let's go and ask the question as well. So I think that professional. So getting the right team in place, having a swing, be prepared to fail, but also having that sort of professional humility. I think they're the kind of the three things I would say that were kind of the big takeaways from me as we look forward.
Yeah, no, that's good advice. And lastly, as I mentioned, you're going to be attending the upcoming Resourcing Tomorrow event next week. What do you expect to take away from this show?
Oh, it'd be nice to catch up with some. I've had a bit of a low profile the last 12 months, Rob. I've been keeping myself to myself broadly, so it'd be nice to catch up with people. It's always a pleasure to catch up. But no, I'm really interested just to undertake the temperature of where things are and sort of reading the news wires, getting the daily sort of emails from broker notes and banker notes. I've obviously sort of followed the sector quite closely, but remotely. But I'll be really interested now to sit down with people and a whole range of people. There's going to be bankers there, there's going to be consultants, there's going to be, as you say, some C-suite. What I love about it is that there's going to be a really broad cross-section of people from all across the sector. And it's the chance to sit down with them and over a cup of coffee or something slightly stronger and just bury into it and sort of find out what's going on. And so you see the headlines, you see the noise, you see what's going on there, but actually getting that sort of, intel, if you like, as well, you can't beat that. And, that's great. And that's one of the great things of the conference is that, you can cover a lot of ground very quickly with a real broad section of people. And I live about half a kilometre from the conference centre as well. So that's even better for me. So I don't even have to travel for it. I can stroll out about a 10-minute walk down there. So, but no, looking forward to catching up with people and just getting that next level of sort of depth and granularity as to what's the sort of what's the drivers behind the headlines and going on from there. And it's great, the ability that you can capture almost with everybody at that stage.
Yeah. And I suppose some of the conversations that you may have, or even some of the talks that you may listen to, may shape how you're going to move forward with your business, and it may slightly change from what you're thinking about now.
Well, look, we're always on the lookout for projects, for connections, for discussions as well, always looking to do that. So absolutely, no, I think from that perspective, putting ourselves out there, letting people know that we're kind of back in the game, and then just keeping an eye out as for opportunity as well. So I think, I think that goes out saying that the ability to, from a business perspective is there as well. But as I say, and that combined with the ability just to see everybody will be really useful, I think.
Yeah. Martin, really appreciate your time. Thank you for obviously sharing your story, talking about what you're looking to do next. And I suppose educating our audience in terms of potentially setting up a new business, some of the things that they should be looking at, some of the things that you're looking at in deciding what's your next business going to be. Is it going to be a private company? Is it going to be a larger asset, depending where it is on the mining curve? So I appreciate you obviously sharing your knowledge. If our audience wants to reach out to you, if they've got any questions, or even if they want to meet up with you at the Resourcing Tomorrow event, how can they get in contact with you, and what social media platform channels are you on?
Well, I'm a man of a certain vintage, Rob, so I don't have a large social media footprint, I've got to be honest with you. But LinkedIn is obviously the kind of the perennial, so you'll find me on LinkedIn. Slightly younger looking profile picture. I must update that now. Less grey in the beard. And of course, through the resourcing tomorrow website as well, with the meeting function there as well. So on an ongoing basis, I'm not on it all the time, but I probably check it sort of 2, 3, maybe 4 times a week on LinkedIn. That's always available. And then, of course, through the conference app, they'll be available around there as well.
Yeah, great. We'll include that in the show notes, accompanying this episode, for easy access for our listeners who wanna catch up with you and talk about gold. Thank you for your time. Really appreciate, and I hope to see you next week at the conference.
Thanks very much, Rob. And you as well, mate. Thank you for the time.
No worries. Thank you for listening. Hope you enjoyed that episode. As always, appreciate your continued support. Great episode here about setting up a mining business. Now, I imagine some of you out there may be thinking that, whether it's now or whether it's in the future. Maybe you've already have set up a business, and you might have got some points from what Martin has covered there. So thank you for listening. Please keep sharing these episodes, and if you obviously want to catch up with Martin whilst he is at the Resourcing Tomorrow event, obviously feel free to reach out to him on LinkedIn or through the Resourcing Tomorrow app. So until next time, happy mining.
Thank you for listening. Remember to reach out to Rob via the show notes, and be sure to subscribe and leave a review. Until next time, happy mining, helping each other to improve the mining industry.